What's going on, everybody? Welcome back to my YouTube channel. It's great to be back, and to be honest with you, I really needed that time off. You know, after working and just content, trading, family, life, pandemic, everything, it just gets on top of you, and the break was really needed. Now, a lot of changes have happened, and I do apologize. I am so hot. It's ridiculous right now in this office, but a lot of changes have happened in the world, and we can definitely see how it's affecting the market. Now, there's a lot of uncertainty at the moment, so we'll have to just see what happens. Be patient. So just give you an update of where I left off in October. I managed to finish the month at 47.49% in profit, which was an absolutely phenomenal month. I think it was one of the best months this year, or one of the top 3 best months of this year for sure. And currently in November, I'm sitting at 9% in profit. Now, last week I did trade, and I did take some absolutely phenomenal trades, some really big 1 to 7, some 1 to 8, but I was really managing my risk. So in terms of the amount that I was going into these trades was a lot smaller than I'm usually trading with, simply because of the uncertainty. And I didn't want to be in a position where I took a trade and then I was robbed of that trade because of the volatility and the spikes, etc, etc. So that's that. We also have some really fantastic news as well. The FOREX Academy, within the FOREX Academy, I will be trading live with my students on Tuesdays and Thursdays. And I've taken this time to think about it over the last week or so, or 10 days, if not longer actually. It's been something that I have done in the past, but it did have to stop for a reason or two. But I'll be doing it again just to share my thought process. So hopefully this will be a great opportunity for those that are part of the community to be able to really get into my mind, see how I trade, not necessarily take signals because it's not something I promote, but definitely something that I'm looking forward to, something that they're looking forward to. So that's something new that's coming. We also have a trading tool that we'll be releasing to those that really are interested in risk management, and that's something that will be coming soon. So I hope that you guys, if you're interested, will take a look at that and see if it's something that will benefit you. It has been designed by a trader for a trader, so that's really something to look forward to also. Another thing is, I want to get your opinion on this. I'm considering setting up my camera just like I have now and recording me for my trading day. So usually that's about 7 in the morning till 10 a.m. So 2 hours after London Open. That's usually generally when I trade, and I'm thinking about just popping the camera there, letting you see me trade, hear my thought process as I'm talking about it, read out some questions, give some answers, just, you know, just the day in the life of FOREX for 3 hours a morning. And then once a week, maybe on a Friday, edit that out for you so you can see how the week's gone and everything's transitioned. If that's something you want to see, make sure you pop a comment down below. Please let me know if that's something you want to see, because it's going to take a serious amount of editing, thinking about this. We're looking at about 15 hours worth of content that will need to be edited down into 30 minutes or so. But if it's something you really want to see, please let me know, and I'll do it. If not, I just won't waste my time. But other than that, let's jump into the charts. Let's talk about my trades today. And yeah, it's good to be back. Let's roll the intro. So, back on the wonderful charts this morning. So, as you can clearly see from the charts, I do have here a winning trade. Now, it wasn't as easy as that this morning. I mean, normally, you know, I'm able to take one trade and usually get that, well, let's stay humble here, but more often than not, I'm able to identify the directional bias of the market. Now, when I did do the live session this morning, it's not something we usually do on a Monday, but we didn't do it yesterday because we was too worried about the gaps that would happen in the markets because of the elections and that. But I did think this was going to turn bullish, and when we was on the live session, I did realize that price was failing to break above this structure when we had this bearish sentiment. So this morning's analysis was this for the 1 minute time frame. I knew that we had an area of sensitivity in and around here. Now, I'm not using that word sensitivity as jargon to act as if this is like a prominent word that we use in Forex. I'm just basically trying to highlight where the market usually reacts. Okay, now what happened is the market started to push to the downside, and as you can see here around London Open, we had this massive spike spike to the downside. Yes, that's correct, spike to the downside. And you can imagine that this candle at this moment in time is now pushing bearish. Okay, pushing bearish. But as it started to push back to the upside and started to turn bullish, I decided to jump into this trade. And I tell you why. I really did want to see price get back to this level. But I also knew that if the market was going to continue bearish after London Open, the first thing it's going to want to do is go in the opposite direction. And this is something that happens for London Open a lot. And that's just a little tip there for you all, okay? More often than not, the market will go in the opposite direction that it wants to go with London Open. And that's usually about 15-20 minutes, or let's say 15 to 30 minutes for London Open. So a little tip there, something you can look out for, right? So I saw the reaction here of this candle. Let's get rid of some of these here. And it started to turn bullish. Now, I did have a slight FOMO here. I'd be brutally honest with you. I knew that the momentum would kick up, and I didn't want to have to wait for a candle close. I wasn't at a key level, so it was a riskier trade than I would usually take, for sure. But I felt that this push down into this level was enough to indicate, you know, after seeing this quick rejection, that the momentum should shift. So I did, in actual fact, set a sell stop very quickly using the trading panel over here. So very simple tool that we have. And I set a buy stop, a buy stop. And then I was targeting some of these highs here, okay? So the target to some of these highs, I do believe at this stage, this looks incorrect. Hold on, what is going on here? Some of the metrics here must be off, whatever. Anyway, so the stop loss here is 7 pips. The 1-to-1 was here around 7 pips. And as you can clearly see, the market pushed up. Now, this panel here automatically ticks the trade into break even when it goes 1-to-1. So as you probably can see from the results here, we had this really strong push and I got stopped out of break even. Now, once the market had pulled back and had failed, I did realize that at this stage the market was turning bearish. There was just one level that I was really monitoring to see whether we was going to break or not. And once the momentum shifted down and we created pushing to the downside and this wick rejection started to form, and then we had this candle here form, I did actually again take another aggressive entry. Now, I'm going to be honest, I know a lot of you are going to be out there, oh, Rox, you didn't wait for the break and retest, and Rox, oh, you're just gambling, and Rox, you're doing this. Listen, please, man. Like I said, last month I finished 47.5% up. I think I know what I'm doing. But I will admit, it was a bit aggressive. I was very happy with the first trade. Very content with the first trade. Granted, it was aggressive, but I was very happy with it. Okay, not just because it went break even. I feel there was a valid reason to enter that trade. Okay, second trade, was there a valid reason? Probably not. It was just that one wick rejection that you can see there that made me go into this trade, and I did actually in fact go in with an instant execution. Now, I tell you why I did go for this trade, just to justify a little bit of why I took it. I just thought to myself that this key level has been holding for quite some time. It's a level in the market where the market has reacted to. And I did think that if I placed my stop loss below this key level, it's a 3.5 pip stop loss below this key level, that I would have enough room to get back to break even by the time price gets to my target, which was up and around here. Okay. And yeah, I mean, it just is what it is. Closed down my charts, went and had a shower and whatever else, and came back and I'd lost the trade. It happens, you know, you lose a trade. Now, after I'd lost this trade, I did realize that, you know, the sentiment of the market now is super bearish. There's no point me trying to buy this anymore. The first buy, I enjoyed. The second buy, you just have to accept the loss. It is part of trading, right? And then I just realized once this key level had been broken, it was game over. I knew that at this point in time, all I was going to be doing was selling this market. Okay? Once I saw the market start to push down and break, I just needed the price to pause, create a key level in the market, create some sort of wick rejections, etc., etc. And I did actually take this trade after these two candles closed. So this is how it looked, like this. And what I waited for is for the markets to then pull back into this area. I placed my sell stop in and around this area. I had a 5.5 pip stop loss for a 1 to 3 risk reward ratio target trade, and you'll see what happens once we get this set up, if we can get it set up. All right, give or take some here. So the market then pushed back up into my stop loss area. I did get triggered immediately. I did almost get stopped out of this because of the tight stop loss, as you can see here, and I did survive the spreads on this. Not sure why, as it said, I was just preparing myself to get back to the office to start the recording, so I just left the trade running, and then as you can clearly see, the market started to go in the direction that we anticipated it to go. So that was my day, really. You know, a break-even trade, a loss that I could have avoided, but I was happy to take because of the key level and the stop loss below the structure. Would I take this again? The answer to that question is no. I would wait for more evidence and confirmation, and what I mean by that is I'd be waiting for the market just to stall. You know, create some sort of wick rejections, create some sort of structure, and then go in for the trade. So I was a bit impulsive this morning. I can accept that, but it's what it is, right? It's trading. But we didn't allow the break even to take over our mind, get us too emotional, or the loss. We maintained and composed ourselves, wait for a better opportunity, and we jumped into the markets. And I can happily say that I finished my day plus 2R, which is a very successful day in my opinion. A break-even day is successful, and any R over that is successful. And the reason why I'm not fussed about this, guys, is because guess what? It's Monday. We're still trying to figure out what currencies are stronger, what currencies are weaker, what pairs we really want to be trading this week, which directional bias we want to be trading. The next thing why I'm not worried is, well, it's the start of the month. I'm already 9% up. Plus this trade, we'll wait for the stats to update. Plus this trade, we're doing all right. We're doing all right. And if we could just maintain the profits, use the profits to trade with for the rest of the month in a very systematic way, then all we're going to be doing is building those profits, compounding them over the next 3 weeks. So listen, if you've lost a trade today, or you've had a break-even trade, or you've had 2 or 3, it's only the start of the month. Take your time, relax, come back. Remember, if you're using a 1 to 3 risk to reward ratio, you can afford to lose 3 and win 1, and you're still laughing. If you take 100 trades, you can afford to lose 70, if not more. We're not going to talk about that because then we just have to go into the logistics of the numbers. But 70% of those trades you can lose out of 100 and still win 30 and make some serious money. Focus on the numbers, trust the process, be patient, stay disciplined, and I'm telling you, you'll see my 1 to 10 this month, if not my 1 to 20. But anyway, that's just this video for today. I hope you've enjoyed it. I'm glad to be back. Please support the channel, smash the like button, subscribe if you haven't, turn on notifications, and until next time, family, trust the process.